day. Welcome back to another wonderful edition of Trading Fast and Slow, where our main focus is managing risk. First thing we're going to do, the same thing we do every single day, is we're going to go ahead and zoom out to the monthly chart as we are approaching the monthly close. Tomorrow, be the last day of the month. And we can kind of see the market is just, for the most part, uh, no change here. No change from yesterday. We were above the previous month's high. We're inside kind of this balance, but this balance is a daily balance. No real change here. If we were to take a Fibonacci, right, which I'm sure a lot of people are doing, you can kind of see that high is basically like right there off that 3.8. So makes sense. People take some profit there. You can see where that 50% retracement is, that 4155. It really just lines up with all of these previous levels right here. So it makes sense kind of, I don't know, to me that we, if we do get some upside, that's going to be the target here. Is going to be like this 4136 to 4155 level. On the weekly, we can see we're in a 3-week balance. We talked about this and compared it to this previous week back here. You can see, we kind of had this outside week and then another outside week where we're kind of having the opposite here. We're having an inside week and another inside week. So we're really just constricting here. And, that low and that high the previous week are really like the key references here. Going into the rest of this week. It's only Tuesday, but those are really the key references. Any downside that doesn't break these previous lows really has an opportunity to come back up and test these previous highs. I would say this is good excess. This is good excess. This is not good excess. So, if the market does come up, that's where a trend is at. It wouldn't be surprising to just see it come up, look above, and then come back into balance before the FOMC meeting coming up in December. Switching over to the daily, you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12th day in balance today. I know it's not the best balance or the prettiest balance, but it is balance, and that's what we got. So that's what we'll trade. We can really see we've got this 39.26 for that 100-day moving average, and then you've got the 39.17. You've got the 50 down here at 38.06, and then you've got the 200 up here at 40.54. We can see that the ATR is getting a little bit less, right? The average trading range, it's only about 59, 60 points. So we've been getting, comparatively to what we were seeing before, we were seeing fairly big day ranges. We've kind of moved up and we've started to balance. We've had a couple big days, right? Yesterday, I guess because of the gap down and the holiday, kind of a big day. We did leave a small gap there from yesterday on the cash session. But now we have a gap below and a gap above. I don't know really how I feel, totally about that gap, but it is a gap nonetheless, and so we'll have to treat it as such. So we'll kind of, we'll have to play it by ear. No real economic news coming out today. You can kind of see here. We had this morning the housing price index, which wasn't really big mover. We've got consumer confidence, and that's in 46 minutes. So that may be a big mover. Definitely want to be just aware for that. And that's pretty much it. Let's take a peek at the COT reports. As of the 22nd. So more short covering there. A little bit of adding to the long side, but not too much. Leveraged money got double short. Hmm. So we'll just have to pay attention to that. Switching over to the profile now, we can kind of see how yesterday went, right? For the most part, just one time frame lower. There was an opportunity for buyers to kind of show up, and it did look like they tried, but unable to fix that C high was really kind of our sign, like that the downside is going to be the winner today. And then, pretty much one time frame down for the rest of the day. A little bit of short covering right into the close, and all of the volume kind of off the low, leaving a poor low behind, which was kind of a surprise if you guys watched that close yesterday. Morning, Tommy. Morning, Peter. Morning, Sebastian. Morning, Roach. Morning, Lecker. So that was kind of an interesting look to end the day yesterday. We definitely want to be paying attention to these single prints here, just because I think today we'll kind of have an opportunity. We've got a lot of volume here, a lot of volume here, and so for me, my plan. Oh, let's actually update our levels here because we're way behind. Um, First day back to school in a while, so I'm trying to get back to the swing. So settle was 39.70. Quarter. The last was 71.50, so we'll keep it the same. And half back is 89. Okay. So we kind of have an interesting look. And remember, we talked about this last VPOC to repair structure. I would say we basically got there. I'm surprised we didn't get any excess. Um, I kind of expect the market to try to repair this weak low or this poor low. I would say it's a poor low and a weak low just because it's lined up with the previous VPOC. We have another VPOC right above. I really think today, though, the key honestly is just going to be this lower piece of distribution. If we can get up, accepted up into this upper distribution from yesterday, we can target that VPOC and that 4,000 level. If we get accepted below, I mean, really below this level, honestly, if we can't even get above that level, so if there's a rally that can't get above that level, I think that we can attack this or low and previous VPOC. And so I think that's kind of the plan today is wait to see how the market acts. Might get a go with situation early on, depending upon how the market opens. But if we get up here, we want to see some support, get on board with that, and try to trade back up to that previous VPOC. Taking a little peek around the block here, we can see. Let's go like this. We can see the dollar climbing up here, getting back above range here a little bit. Still pretty far off of our mark. We've been watching that 108. The Australian dollar got beat down pretty bad yesterday, but has since rallied, pretty strongly. The euro got beat down yesterday and is continuing to get beat down. Bitcoin really just kind of hanging out, not doing much. Oil starting to catch a bid here. You could see this little bottom. I don't know what's going on here, but I mean, market basically just died off there. No selling, no supply. Market pops up, does it again. Market pops up again. So really looking for that to get above 82.31. That's kind of my target on the upside. Apple, we can see Apple kind of, holding that gap from yesterday. I mean, definitely where's the cash session here? Did not close that gap, so there's still a gap above on Apple. AMD really didn't do much yesterday, right? Didn't get that push down that the rest of the market got. Amazon, same idea, basically just balancing. Google for the most part, doing the same thing. Closed the gap above it right off the open, but then traded lower. Meta, same thing. Still looks like it's sitting in balance. Microsoft had been one of the stronger of the stocks, but we're kind of watching. You can see the pretty big range that we're watching. Netflix just kind of holding. Nvidia actually opening up off a little CME gap, so a little bit of strength there in Nvidia early on. The TNX is starting to climb, right? We kind of broke this little downtrend that we were in, so that's not great for the market. Tesla looks actually pretty decent. And then the VIX is basically just trading sideways. No change for the most part. I'm just gonna update these. Oh, they're pretty far down there. 39.26. Oh, I guess not that far really. Live for love. Good morning, JB. Good morning. Hopefully you guys are doing well. Hopefully you guys' holidays went well. You know what we didn't do yesterday? We didn't listen to Reveille. That was a mistake. Morning, Dad. Still got about 7 minutes. If anyone has any questions or anything, comments, concerns, statements. All right, that's what we needed. That's what we needed to get motivated and ready here. So here's the here we've got 4 minutes. The bullish scenario is any push down that doesn't break this low and then gets accepted above 84. And you're like, well, that's 20 points I'm going to be missing out on. I should just be getting low down here and risking it against that. I'm not saying that you can't do that, right? I'm what I'm saying is if you want to play it safe, let the market get accepted above that 84 and then go lower. Um, if it doesn't break the low. If we come down here and we break that low, even if there's a rally, there's better odds that we can fade that rally off of that, depending upon where it fails at. And really, like I said, it's going to be hard to be getting long below the 84. So any rally that fails over 84 is kind of like, hmm. But of course, we'll trade the chart in front of us as always. We won't be getting ahead of ourselves or, doing anything too crazy. Yesterday, I feel like a lot of us, including myself, were looking for some longs, and it really took some time. I was actually looking for shorts, and then the market kind of convinced us of a long. And then as soon as I turned my computer off, came back, well, not turned it off, but walked away for lunch and then came back, it was, market went down a pretty decent amount. Um, so I was actually, pretty thankful that I got off the computer because I probably would have got stuck in that. Uh, well, I mean, I would have just took a loss. I probably wouldn't have got. But we can see a lot of people did, right? And that's what caused those single prints. Is a lot of people got liquidated. The market moved lower, and we got off. I think during E period, and then you could see I period took it down, and then had this lower distribution here. So it seems that they set it up pretty well. We got 1 minute left. Basically opening up right at the settle, so the breadth should be pretty flat. Tick should be pretty flat. We'll watch the sectors. That could give us our earliest key. There's the open. Trade lower right away. Watch to see if we're going to break the open or they're going to re-offer this. A lot of selling going on down here. Let's see if we get this spill below 65. A little pop below the 65 there, but no real continuation yet. See if we're going to get this continuation. Like I said, it's hard to be a buyer here just because we're below that distribution. You could use this as the risk, but I mean, look at everything else. Everything's kind of red. So the tick is, basically flat, but the breadth is negative. Or breadth is kind of positive, but sectors are kind of red here. So I would say if you want to be a little bit less risky, you could use the Globex low if you're looking for a long. Um, if you want to be a little bit less risky, you could get long above the open. Use the Globex low as a stop. So we could do this here. Cool. Risk to reward. We'll use the Globex low. Your entry would be just above the open, and you'd have to target. I mean, really, you'd want to target that the top of that distribution, but here would be your minimum target, and that would be right to the top of that distribution. There's a break of the open. Sectors are switching green. Volume stepping in. You honestly could probably move your stop to 70 quarter, so basically right above break even here. Um, and I think we're going to be good. We'll move it to the settle. Should be pretty close to our first take profit. Ooh, smash back down. Don't want to get caught in. Oh, there it goes. So not a bad little fade, I guess. I mean, we got up 5 points, 6 points almost. If you're still rocking it, then good for you. Back below the open's not a good look for those buyers. Let's watch this volume here. 68. If they get below 68, then there's probably going to be some more downside. But still didn't break that previous low. I'm not having any trouble with it. I don't know if anyone else is. What's the issue? Oh, with Ninja Trader, I'm not using Ninja Trader. I'm not sure. Tick is trying to be strong today. Weighted AD is positive. The breadth is picking up here a little bit as well. You can see it looks like there is some buyers in here, you know, it's hard to deny it. The Dow just got a huge pump all the way back above its VWAP. I wonder if there's some news. What time is that consumer confidence? I think that's at the top of the hour. What's up, All Stars? Your connection is yellow. Yeah, 21 minutes, top of the hour. So if your connection's yellow, that means it's just not connecting, so it's a rhythmic issue. Nasdaq's getting a smack down here. Going back to the low of the Nasdaq's like basically almost at the low of its since the open. And see if they can get back underneath the 68. You can see all the selling that just happened right above, uh, basically right on the settle. Breath is still kind of trying to pick up. Nice. Below the 68, this thing could spill. That's such a battle here. This might be a diddle zone here. We might have to just flatten everything and just wait for a movement. You can see just like they're just holding it above the open and then selling it, holding above the open and then selling it. It's like they're trying to trap somebody. Um, Trying to see how this goes. Everything is looking like it's getting kind of a bounce here. The breath is cooling though. Healthcare is coming down. Tech is still flat. Everything, yeah, no real decisiveness. You can see we're still in the previous day's range. We're still in this lower distribution. Breath is picking up to the upside here. It's really just the Nasdaq. It looks like that's kind of holding the market lower. The Nasdaq's, much lower percentage wise. Here, you've got the ES. It's up. Well, the Dow's basically flat. The Russell's up 0.5 while the Nasdaq's down 0.3, 0.03. But the Nasdaq's picking up right here. The big bull showing up to work here. The bot's still not in the trade. It's so funny how split it is. Like, literally, they're just trading it back and forth. Like, I mean, it's just crazy how it's evenly split the volume is compared to yesterday's settle. Right. Below the 68, this is short. Hello? Hello? Hey. Was it? That's a pain in the ass. Mm-hmm. Yeah. Okay. What are you eating? From where? Oh, okay. All right. I'll see you when you get home. All right. Love you. Bye. All right. Let's see if we can find the volume down here below this 68 that we just broke to get some continuation. My Rhythmic desktop does not log in either. Maybe you got to update it or something. Look at the breadth in the nicey though, but now you're starting to see the tick get low, starting to see the weighted AD break down. Give us that prior day low, you fucker. I got my last lot stop right at break even, 68. I shorted right off 68. Actually, I shorted 71, 71, 69. I think I'm gonna move my stop down to 67 and just give a point of profit for the last lot, I guess. It was disappointing on that first trade. It came all the way back to basically break even. That was fucking annoying. So let's not let it happen again since we're not getting any greens from the market yet here. There we go. Oh, come on. That was just a teaser. Teaserooski on that low. No one likes that. Dow's coming back down. I want to see this breath cool off. But, I mean, you can see the sectors for the most part are, that, it's tough. Today it's tough. They're just like back and forth. No conviction again, just like yesterday. It's really tough to be one-sided. And I think these are probably some of my most difficult days when the market has when the market goes back and forth in a short range and gives opportunity on both sides. Because we've just been in such big ranges lately. I'm like looking to hit like some 10 pointers or something like that, but today's been quick. I took those first four, well, first three for is 63.75, so for just about 4 points, and then just one more, a little bit over 4 points, I guess, but one more on 68. AMD popped above its open, and look at the breath is picking up, and then all the sectors going red here. 10 minutes until news drops as well, so we've got to be ready for that. But remember the plan. So this is when we have to remember the plan, right? The initial plan from the open was to stay short if we were below this 83, right? We saw an opportunity to get long on a break of the open after sellers looked kind of weak. We took advantage of it, but then we went back to our original plan, which was to get short. And it's working, right? We stayed patient, waited until it got back below the open, got short of the 68. I shorted a little bit early maybe. But that's still the original plan, was to stay short and sell the rallies that don't get accepted above that 84 distribution, right? Where the I mean, you could call it 83 quarter. I mean, wherever. If you're over here worrying about exacts, then it's just you're gonna drive yourself mental. And one thing I thought about doing, so I was kind of well, not kind of I was doing yard work and listening to this book, and basically in the book the author talks about how the book's not meant to be read front to back, right? Like a traditional book. It's more meant to be taken lessons from. And so I figured that we can utilize this book once a day towards the end of the stream when the market starts to get slow. Take a lesson out there. If it applies to you, it applies to you. If it doesn't, it doesn't. But we can just discuss it as a group, and I think it will kind of get everyone's minds moving, and get some people maybe thinking outside the box, or maybe looking inward, which I always think is very important. Something people really don't do very much of at the end of every trading session is take a peek on the inside and see what's actually going on. If we don't get a strong reaction here off the 60, we should just fucking just slide right down the pole. Come on. I'll be right back. I'm gonna go get that book. Yeah, that's how it always works, I swear. As soon as I close the stream, they're like, and it's always the downside because, like, normally I'm buying the market all day, and then as soon as I stop buying the market, it just shits a bed. So you could pretty much just, if you want to get short, just wait till I get off, and as soon as I get off the stream, just click that short button, you'll be good to go. All right, I'll be right back. Cruel joke. Can you stop the stream now? Yeah. Looks like buyers are stepping up, to be honest. Watch a retest of the 62. Failure to get down to the 60 is weak, really weak. I'm still in my short, but I'm just getting really cautious right here at this 62. Watch the reaction. Selling. Come on, let's fix it. God, yesterday was like this. If you guys were here with us yesterday, we just grinded all day. It was just the worst. Got a call count in AMD. Looks like it's trying to take the daily high. Headed toward POC. My algo went into a short. Nice. I just got a pretty nice little fade, guys, to be honest. Right off that 62. 61.75, 62. Took them both off right here at 65. The IB you're trying to connect to is not authorized to use for Ninja Trader with Rhythmic for Ninja Trader brokerage. The message I got kicked out. Post a screenshot in the Discord of your login thing. "30 seconds, we have consumer confidence, so be careful if you're in a trade here." B opens up, pops right up to 68. Let's see if it wants to go get that VWAP. VWAP's up at 71. Damn, I should have held those. You know what? I didn't want to risk it with consumer confidence. Let's take a peek at what consumer confidence is telling us here. 100.2, so it just came in barely over expected. Like literally 0.2 over expected, so I don't really think anything crazy of that. Falling off a cliff. See if it gets back below that 60 and fixes that low. B period just inside A period, just balancing. So a little rally, but no continuation. And basically right back to the impulse, which was the open of B, which 65-ish. If you just send me a screenshot, Liker, I pretty much have dealt with so much Ninja Trader before that I can probably tell you what to do or what the issue is. I'm a multitasker. See, the weighted AD is still negative. The breadth being positive is what throws me off, but the sectors are all negative still, so it's kind of, it's kind of hard to really fight against the short side. I know there's some opportunities for fades, um, obviously, but I mean the range 75 to 61, 15-point range is pretty minute for the most. Yeah, I mean, I don't know. It to me, Tommy, it seems like we might just be accepting these prices lower, and it's just taking some time. Um, what I was actually just doing was looking at the daily chart here, and like I'm really trying to catch the drift of the market, and it's kind of just undecided. It's kind of like it kind of seems like it's steadying here before the low of balance, making me think that it wants to break the low of balance. That's kind of what it's making me feel like, and that's what's making me a little bit I guess quick to pull the trigger on and off, because it's just there's nothing going on both sides. Yeah, so like you said, like just weakness on both sides. We take a peek at the volume. What's interesting here is like you see this volume come in on this down day yesterday, so pretty decent volume comes in on the down day, and the open interest increases. So volume increase and open interest increase. Oh, Peter, yeah, Lecker's having an issue with it as well, but he's on Ninja Trader. I think it sounds like a rhythmic issue to me, but not sure.
Yeah, I think it's a rhythmic issue because I can't even log into our trader, rhythmic trader itself, and it
Yeah,
was working fine and disconnected. So fucking rhythmic.
yeah, rhythm. You created that stage 5 account though, didn't you?
Yeah, and I set it up, and now I gotta go back in and where rhythmic was working fine. I've been just so busy. So
Mm.
not my plan for today though.
JB said that he's got Ninja data issues too, and he's using CQG data. VWAP's at 73 here, 74. Market's back above the settle, putting some volume in up here too. After 2 days of watching the Dom on the Nasdaq and the Dow, um, doesn't seem as helpful. But I mean, 2 days is really nothing. Go catching it. Maybe they want to test that VWAP, see what they've got. Nasdaq trying to catch a bounce. Excuse me. Nasdaq trying to catch a bounce here. Look at the breadth is almost 4. All the sectors are trying to go green. Financials is really catching a boost. My rhythmic is not open. Any help? Yeah, I think everyone is having issues with rhythmic. Dom trading is the cult, Caesar. It's just like it depends on the type of person you are, right? Like it depends on your brain because I really don't think everybody's trading style is going to work exactly the same. And if you're one of those people that's a good pattern recognition type of person, then the Dom eventually might speak to you if you start um if you start utilizing it more often. That VWAP so close. Get all this volume coming up here. Pick's still failing to get above 600, which is crazy because we've got a breadth of 4. So there's buying, but there must be just as much selling because the tick is, not getting anywhere. Very neutral. I'd kind of say when we get above 6 or below 6, or closer to above 6 now, but that might be a key. Here's your sign moment. Ooh, look at the tick. Oh, they wanted it, huh? It was like, ooh, get some. My account, yeah, it uses Rhythmic, but I'm using my data is the Denali data feed. So I'm not using rhythmic data. I'm just I'm just trading a rhythmic account. All right, Peter. Have a good day, man. We'll catch you later. Yeah, hopefully they fix it.
Do you see the low of this thing? If it breaks a low, where's it headed?
Oh, low.
How low?
Like, well, I mean, it just depends, I guess. I'm looking for this area down here, this 48 to like 44 area. But we've got to get continuation without a decent response off of
Of
this.
course, yeah.
But it does look like it wants to go lower. And it's kind of looked like that all day for the most part.
If only Jared was here to tell me what to do.
If only. Where is he?
It's a good question. I don't know.
Sorry,
I was thinking the same thing.
missing too many opens here. Recipe for disaster. All right, 1 second. Margaret just got home. All right. My bad. What did I miss? Oh, up to the VWAP, huh? Buyers are kind of struggling here. See if they hold the 71. There's a bid on the 71. Oh, Peter, your data just came back? Nice. So they held the 71 there. Buyers did. Still kind of a battle here at the 71. See that tick peaked above 600. The breath is really going strong. The ES and the Dow both tagged their VWAP. Sellers are going hard in the paint right here, but they might be getting stuck. They've got it below 71, but let's see if they can hold it. Sorry, I just had a second. B breaking the high. A lot of things going green. Weighted AD going green. Tick trying to get above the 600. Is it gonna do it? Ooh, it's tough to tell right here, but it looks like both are struggling. Oh, the Dutch team's on today? Nice. USA's on today at 2 o'clock. Just pathetic up here, huh? Just cannot take it yet. Little fade back down. We can probably catch a long here above the VWAP. Like to see the tick participate though. It's a tough spot to get long. Oh, there it goes. Back to the VWAP. The play's really in the NASDAQ here. I think the NASDAQ's going to run up about 25 points right now. There we go. Watch this tick here. Probably get in right here if you haven't gotten in. 77. You just have to put your stop at 76, but it looks like it's going to keep going. A little bit of absorption up here at the high actually by sellers. Buyers still stepping up though.
You are a generous God. I got it at 72. I was like, I'm gonna fucking trust him. Fucking got done for the day. Fuck. Good shit.
Did you add on 77 or were you a little bitch and you're out of the trade?
No, well, I put on a little too much at 72. I put on 4. I thought I accidentally had the number on 2. So I put on 4 watts instead of 2 watts at 72.
Oh.
And I got out at 76 quarter. So it was like yeah, it was a $670 trade. That was beautiful. And then I got back in at 70.
Added at 77.
I did. Okay, I put on
okay.
1. Okay, I got out, but I got 1 on. Okay. Be a lot cooler if you did. How does he do that? You know some responsive selling's gonna come in right there.
Yeah. Well, they should because there's trapped longs there from yesterday, so they should be selling their position back for break even. Yeah. But the level up still, I think, is like up there, that 89, 88 level. This is just single prints. I still think there's a rotation back up there. Because now we have trap shorts below. Unless they close this distribution, we'll see, but
Thank you for calling the Infinity Claims Call Center.
we can
to
hear your
ensure
mic, Dad.
quality service, your
sorry.
call
Jared, did you get that text I sent you?
Yeah, but I wasn't on.
Yeah, I know. But did you get the second text that I sent you? The first text was a free 5 points. Those were for you and James. Those were a little gift from me to you guys, free 5. But the second text was funny.
Alrighty.
Oh, that Call of Duty Warzone, I'm telling you, that shit is so hard.
Oh yeah. I ain't ready for it.
Let's see if they flush this CLO. The CLO is mechanical, I would say. This is something that we talked about here in the early morning. A failure to get above that distribution and get accepted above that distribution would be a sign of weakness. So just because we caught a nice long doesn't necessarily mean that this thing's not going to turn around as the day continues. We need to see acceptance above this H low here, above this upper distribution. If we hold these single prints, it'll be a nice battle, and it'll basically just, and we actually probably will range in a short range to see who gives up, and then the market will probably trend from there. But I think if we close the distribution, get back below the open, then we can probably, we'll probably pop, we'll probably head below the open. Let's see if we close the distribution. If we close the distribution, probably head below the open, pop to the VWAP, which is 74, and then break the low. But we can probably look to fade 74 later in the day.
Damn, do I need to get out of this long? Am I oh shit.
A little bit of selling on the 76 there. So they closed the distribution, but not really. I don't really count that, to be honest.
Hmm.
So here's kind of what I want to look for with this excess on the high now. I'm looking for the market to break below the open, hop back up to test the VWAP, which will be right around 74. And I want to fade that to trade back down to this trend, which, you know, probably 67 maybe. Maybe a little bit lower. Back down into where, you know, where all this action took place at earlier. We have a weak high and a weak low now. And look at the tick. We still haven't got a tick to close above or below 600. Above positive 600, below negative 600. Breadth is still firmly strong. That's what I'm saying. Like I don't want to get short right here unless the C is able to break the open, because that would show me a little bit of strength from sellers, and maybe then I can get in on that pullback on the move down. But selling here is kind of it's a tough spot, because what we don't know is all the selling that's going on in this area old business, so old buyers that are trapped selling their position, And so we're just getting out of old business, and then the market can fade back and continue what it was doing and fix this weak reference? Or are all these people selling out, because they're finally back to break even, but new buyers are stepping up and initiating new positions? And so basically where we're at right now, there's really no way to know that, but that's kind of what we're looking for. And so honestly, I don't really think there's a trade until then. I mean, you can snag a point here and point there, whatever, but I really don't think there's any afforded opportunity here that's worth the risk, in my opinion. You guys see Elon's going at Apple pretty decently. He hates them.
Imagine that the guy all for free speech goes after a company that is known for their censor. Because that's what Apple is all about, is making certain that people do what they want. At least that's my opinion.
Yeah, I pretty much agree. It's such a tight rope, I guess, because it's like both of these companies, Tesla, Elon being the owner of Tesla, and Apple, participate in, kind of gray areas, so to speak. Like Apple, I mean, they both kind of use uh more or less slave labor. Because the people of China really don't have the rights that, we're afforded here in the States or in most parts of Europe. But like Poke was saying, we've seen Apple do it before where they were just like, you know what, fuck you. I'm pulling you off the App Store. Remember they pulled what's it called?
They pulled Fortnite.
Fortnite. Yeah, that's what I was trying to think of. They pulled Fortnite. They're like, fuck you. Damn. I mean, really what we're just waiting for here is either a push below 74 or a push above 80. Let's just see what we get first. Financials are really green. 80 up 80. Healthcare's down 0.1. Volume looking like? Got 15 minutes till the next period. About 2% more volume than yesterday, which isn't really saying much. FL, thank you for the sub. Watch for this 74 to break. This could be a go with situation here. Yeah, we'll just wait for our plan. We'll wait to see if it gets below the open. I kind of want to short from 74 to the open, because that's kind of what I'm looking for anyways, but I don't want to get too early on this as everything else kind of looks a little bit bullish, so don't want to get stuck selling the low either.
On the looks of it, I don't know. I agree with you though, Brad. Like if we can get up above that 80 again, we're gonna run out.
I don't know. If we, I mean, we've got to get really above like the 84 to run up. Even if we pop up to like 81.
I think that would look like, you know, a rejection down below, and then it would probably spark some more buyers.
Yeah, I wonder if they're trying to front run it. And all the selling is just old business. Wonder because we didn't even get back to the VWAP either, and buyers came in basically at the same spot both times around that 75, 76 area.
Mm-hmm.
Now sellers look kind of stuck on the 77.5. Nick is picking up here a little bit. Breath still looks strong. All the sectors are starting to turn green here. Nasdaq's above its VWAP and holding. Fades back down. Like I said, to get convinced, like there's no way I'm buying the breakout here. It's just not going to happen, right? Because we haven't seen the conviction, and it might just go. We'll cause some single prints. You know, we've only got 10 minutes left, so maybe it will. But I need to see the market get over that 84 to convince me. Not only will that break the downtrend, that'll close the distribution from yesterday, repairing the structure. I still hate this VPOC and this fucking poor low, but that just kind of shows the weakness of sellers early on. We talked about that. Any failure to break the previous day's low is a sign of weakness. Well, we got it. I'm so fucking pissed, dude. My first long that I took, not that second one, Jared, but the first one that I took was from 63.
Oof.
Yeah. And I closed it like on 65 and 66. I closed it really quick because it was while we were coming down. I just faded it.
Yeah. Dude, that's the problem. I've brought that up to my dad, and I was telling him, it's like sometimes whenever it's dangerous to fade, sometimes because if it does start gaining momentum, you're quick to take it because you're like, you don't want to believe that this is, you caught the reversal, you know?
Right. And we cut a nice trade later on anyways,
Yeah.
but and that's more of the thing. I think I'd rather do that. I think I'd rather catch small trades at the low than more or less just risk it more, put more risk on just to be right. You know what I mean?
Seeing like, for me, you know, it's almost like you could put on a long right here and then just run a tight stop at like 74 or something, you know? It's like,
And I wouldn't get long right here. No chance.
oh,
Because I want it to go below the open.
so you could buy it again.
No. So it can bounce up and then I can sell the 74. Like I kind of want to short from here because I think we're going to go below the open, but I just don't want to short the low.
Mm-hmm.
And see, so you're buying it with a tight stop. You know, it's kind of like it shows like really kind of like the full circle of trading really, because like for me, I'm just not going to be in a trade. So this is not an area where I would like to trade, but for you, it's an area that you would like to trade. Like, you know,
Yeah, it's bounced off of it 30 times. You know,
Yeah.
it's like, well, just if you ran a tight stop, like literally like less than a point. You know, it's just like, why not? If it hits me, it hits me. I didn't
seems
take
like a
it.
gambler's mentality. Like, yeah, it's just a point. Just a point.
Yeah.
Just a point. Like,
Well, no,
you know,
no,
after
that's
fucking
just, that's
700
not,
points. Like,
that's not a gambler's mentality. That's just risk management. It's like, oh, okay, I think I can get 6 points out of it if it goes up and 1 point down, you know?
but is that a good spot to take a trade?
I was gonna say, so if you're getting into a bad trade, so you're saying it's not gambler's mentality, but you're saying I'm gonna take a bad trade, but I'm gonna have a short stop. Well, a potential bad trade.
It could have been a bad, yeah, see,
Jared, it's not just me that thinks that some of
I'm
the
just
things you
saying,
say are a little suspect.
That's suspect. So that gambler's mentality is I'm gonna take a risk, but I'm gonna hedge my bet. So it's not that you're not being, I don't know, responsible gambler, I guess. But the reality is you're looking at a bad trade and hoping that your stop will save you. That's what you just said, just so you know. I'm translating it for all those, all those out there.
So it's not just me.
Son of a bitch.
But that is my uncle, so he's related to me. So he probably, hears similar things the way that I hear them. And he's raised similar, so.
Yeah, this is just creating the liquidation it needs to go up. So.
Oh. Good to know. So look for it to get below the open. If they can't get below the open, that's when we have this opportunity to kind of buy a pullback here, I think. We're still being patient. We've got 6 minutes. Oh, shit. I'll show my- If it breaks above 74, this could be our chance. We can buy with a stop just below this 70. I kind of want to wait till the turn of the next period though, so I'll set up the trade. But let's wait until the next session. Board. Stop. Put our stop right below the open. We're gonna buy on the break of the VWAP. Bill. That's a tough risk to reward because we only really can expect it. 4. So here's the possible setup, but we've got some things that we need to have happen and some things that we're going to have to do quickly. So we're holding this low, which is good. We're going to wait till D period opens up. We might not have the opportunity though, but basically we're getting long on a break of 74. So as the market breaks up above 74, we put positive tick. We want to see tech go back to green. We'll buy the break of 74. Initially, our stop is going to be 5 point stop, and it should go up right away, and it should go up right to the 78. And as it does, we need to tighten up our stop like almost immediately, right below that 74. Basically, we're looking for it to break above the VWAP, shorts the cover, take us to volume, maybe a little rotation there, and then continuation to our target. But we're going to be tight or quick to tighten up the risk early. All right, here we go. We haven't seen the shorts cover yet. The D period opens up in 2 minutes. It's a tough hold if you want to hold through the open, or if you want to wait to open your position until the open of D. But you might miss your chance. But you also might not, so. Got about 1 minute left until D period opens up. Seller's back under the VWAP here. C low is mechanical. C high is mechanical. A high is weak. Or a low is weak, excuse me. The ES is really the only thing that's not breaking trend to the downside here. D period opens up. All right, let's see what we get here. Watch for shorts to get scared above the 75. Start to cover here. Now that we're back up here again. We want to see it happen quick. Ooh, that's not the greatest look there.
I got flat right there.
Flat back at the 74.
Yeah.
Pick's trying to go green here a little bit. Ooh, we'd like to see this tech go green here. We would like to see them all go green naturally. Trying to get below the open. D-Low's mechanical right at the open. They fix it. So that was okay. Didn't work. So there's the break of the open.
Sabbath day. You got to do the whistle after.
Oh yeah.
Sabbath day.
Looks like the tempo's picking up here a little bit. Look at the tick.
I'm just glad I hit the flatten button. It wasn't doing what I wanted it to do. So I was like, getting out.
I get the low here. Look at the tempo's picking up. Look at tech. Tech is getting hammered. Oh man, the Nasdaq's getting punished hard right here.
And with that, I just qualified my account.
Nice.
Well,
Nice.
not quite yet. I have to close this last trade. I'm still in 2. I had 8 total, but I sold some at 68 half, 64 half. I want to move it up to 60 half.
I was a little scared to take a short because it dropped so much, like so quickly. I was like, I went short and then got an extra 2 points out of it. That was nice.
Nice.
Yeah, I got short way earlier than I should have. So definitely don't use this as an example.
What'd you get short from? 72?
All right, I'm out. And qualified my account. Son of a bitch.
Nice.
Nice.
Happy day. So that was, I was about 300 bucks down. I just didn't want to wait forever because I have meetings I gotta do. I gotta pay attention. Yeah, my counts kept going, jumping back and forth, but they kind of like right now it's 1 in 37. They were kind of leaning toward the downside. So I just wasn't buying the upside, that strength. I originally got short at 69 on the way up. And then, yeah, I definitely took more heat than I should have, but
You're
it was
trading
because
the
it was,
MES though, right?
yeah.
Yeah. Not bad.
So when it got below 66, I think is when I took my first, but it was only two contracts. I think it was like 60, 65.50 maybe.
So hang on one second. Now the key here is that we've broken the low, so we've fixed this week low. Are we going to get volume that moves down and get continuation, or are they going to look to repair that week high now? It's a tough spot. I mean, looks pretty downsidey to me though. Just kind of stalling down here though. We had like some quick tempo. We saw tech really push the downside hard as it got kind of smacked down. So just be careful of responsive buyers here buying underneath yesterday's low. Sorry, go ahead.
No worries. Anyway, so I got it on the way. I got the 2 contracts on the way up, and then when it started popping, I basically stayed out for a bit, and then I averaged in a couple more. So I did a 2 buy, and then I did a 4 buy up at 79
Okay, that's
quarter.
we're starting something good, Brad.
Hmm?
I said we're starting something good.
I
What's
was
that?
taking a page out of Jared's playbook. Just
That's
saying.
13 days in a row. I've hit my goal.
Nice.
Mm-hmm. The best part is well, technically I flattened that one, but every trade was profitable. That was good.
You'll never know because you don't write any of them down, so it doesn't matter.
I can look at them. I'll send them to you.
Yeah, but just because the trade's profitable doesn't necessarily mean that it's a good trade.
That is true. That's true.
All right, because I go with, there it goes.
Dang, there was more there. I could have held. I should have let those 2 just run forever. See how far they went. I was already up a crap ton of money, so it was fine, but it was a good trade. I just wanted to get funded.
Nice. I hit a fucking mean NASDAQ short right there. Oh, that was what's up. All right, time for some fucking Call of Duty.
Dude, yeah. What's up?
For
Holla at
real.
your, holla at your boy.
I don't know. We gotta keep gotta keep riding this thing down. Looks like it's going to 50.
With the vengeance.
A little bit of short covering right there. Look at the change in tone here.
Dude, under 1,000? That tick up below 1,000, huh?
Yeah. I mean, like, we were mixed bag pretty much all day. Now we've got tech going from basically down, basically flat to down 0.72. That's a pretty big drop. Financials has cooled off quite a bit. A lot of other stuff has turned red. I mean, it's not looking great out there. The breath has even cooled off quite a bit. Nasdaq breath's almost back to flat. The big punishment was in the Nasdaq here, so really just watch the Nasdaq and see if the Nasdaq's going to turn around or not. If the Nasdaq doesn't turn around, then you know that this thing's over, doomed. Volume coming down. A little relief bounce. $308 lots or 313 lots sitting on the 50 here. If we're going to get this continuation. There's tap of the 50. Little tap, tap, taparoo. Mm. Mm-mm-mm. All right, let's see the reaction we get here. I was actually looking at this zone down here as a buy zone, possibly. Little short covering there on the 50, 75, it looked like.
Call of Duty?
I don't know. I want to see. I want to see how these single prints open up. If we open up with some single prints, then there's some more opportunity there. This thing might come back up to like 60
I hope not.
though.
Because I got long at 50 and closed it right there at 52.50.
Damn, buying the low, huh?
uh, nah, I was like 2 ticks off, but One sec.
Zach may just drag this thing down to hell. Nasdaq's getting beat down pretty bad right now. AMD's not really going with it though. Apple's down 1.5. Amazon's down 2.25. Tesla's basically flat. Nvidia's down 1.5. Netflix down 1.5. Microsoft down 1. Meta's flat. Google's down 1.7. Offers moving down. A little short covering again on the 50 though. Little bounce. And we're 46.5 is the S1 as well. Really hard to be a buyer here, right? Like if I mean, even though this is kind of the zone I was looking for this morning as a possible pullback entry, uh, I'd have to see some more trading go on down here before I'm like, oh, this is a good zone still. Just with everything that's going on, the tempo of the market, buying here, unless it's just for like a quick fade, is a bit more difficult than, you know, confidence of buying one of your zones. Like if we were, showing more bullish signs. X almost down 1% now. $52 is where the offer's at right now. Let's see if they move down. Okay, we like that. Nice, good continuation on this thing. See if we can keep going. Look at tech down 1.14. All right, I'm moving my stop to 45. 45 half. I don't want to get caught in some fucking short covering. Still running the downside, obviously. All right, I'm flat on the short. We've got 9 minutes until E period opens up. That should give us some more information on what we want to do next. Who's ready for the daily lesson as we start to enter the most boring period of the day, E period? Let's start here. The lesson is called Self-Monitor by Keeping a Trading Journal. Jared, you still in here? Paying attention?
Yeah, I'm still here.
Okay. Steps towards self-improvement. Success does not consist in never making mistakes, but in never making the same one a second time. What are the core processes of self-coaching? What are concrete steps can we take to make changes in our trading to improve performance? These are some of the topics we'll tackle in this chapter. Much of this chapter comes from research over the past several decades that has illuminated common effective ingredients across all counseling and therapy approaches. An interesting finding from the research is that all of the major approaches to counseling appear to be more effective than no counseling at all, but no single approach consistently shows better results across a range of people and problems. Not only do the major modes of helping seem to work equivalently, they also seem to work for many of the same reasons. Those reasons capture the essence of what creates change and what can fuel our efforts to become our own trading coaches. And remember, this is a chapter out of a book called The Daily Trading Coach by Brett Steenbarger. And he has suggested to read this book, but in no specific order. So, lesson 31. Self-monitor by keeping a trading journal. Self-monitoring refers to methods that you use to track your own patterns of thought, feeling, and behavior over time. Self-monitoring is a foundation for many of techniques described in this chapter because it tells us what we need to change. We can't alter a pattern if we are not aware of its existence. Very often in brief therapy, the first homework exercises involve self-monitoring, just as observing the market patterns precede our ability to trade them. Becoming aware of our own patterns is the first step in changing them. One of the most common ways to monitor oneself is through the use of trading journals. Active intraday traders might make entries during the midday break or at the end of the trading day. Others might simply write in the journal at the end of each day in which they are making trading decisions. The key is to catch your patterns as soon as they occur as possible, rather than rely upon fallible memory. Note that self-monitoring is not a change technique in itself, but it often leads to changes. Once you see your patterns with a crystal clarity, including their costly consequences, it becomes much easier to interpret them and prevent their future occurrence. At other times, self-monitoring may alert you to patterns that you did not know were present. This is exceedingly valuable, as it lays the groundwork for change that would have been impossible. Anytime you systematically review your performance over time and the factors associated with successful and unsuccessful performance, you're engaging in self-monitoring. For example, I reviewed my recent trading results trade by trade and found that I was taking larger point losers on small trades than my larger ones. This review led to the realization that when trades were quite small, I was not as vigilant in setting and sticking to stop-loss levels. Although the total dollar loss for each small trade was not huge, over time the small losses added up. This led me to establish a new routine for setting and sticking to my stop losses with small trades by explicitly writing out my risk-reward ratio for each trade before I placed the order. The self-monitoring made me more conscious of what I was doing, when in turn kept me trading well. Self-monitoring is the foundation of which all coaching efforts are built. So, we'll dissect that paragraph. That was kind of a lot. This is something that, probably everybody can relate to. Are you keeping a trading journal? Are you keeping track of things like your risk to reward? If you're not, it's going to be tough to improve over time. You might get to a spot where you become stagnant, and then you kind of have a inability to be able to test that forward edge because you're not tracking any of the patterns that you're making, so it just becomes a lot more difficult. So one thing that this book suggests is to use a risk to reward ratio. Not always does it play out like that. Not always is it going to be at least 2 to 0, and not always does a good risk to reward make a good trade either. But that could be something that you can at least track. If you're not tracking anything, maybe start with your risk to reward ratio, and that can give you a thing. The thing about the risk to reward ratio is, if you're not writing it down right away or right as the trade is over, then it's going to be tough to remember that at the end of the day. My experience is that it's the best predictor of failure in the trading profession is the inability to sustain self-monitoring. This inability leaves traders unable to clearly identify their problem patterns, and it prevents them from reflecting and learning from their efforts at change. Goals without self-monitoring are but mere good intentions. They never translate into concrete actions to initiate and sustain change. So that's a key thing, and I talk about this all the time about how important actually journaling is, right? If you're not writing it down, it's kind of like if any of you guys have like an Apple Watch or like a Fitbit back in the day, where if you worked out but you didn't have your Fitbit on, then it just didn't count, right? It's kind of the same idea here. So if you're not journaling, I mean, it's so fucking easy. Just write that. I mean, you don't have to be an expert and you're like, my journal, I don't know what I'm doing. Track, like we just said, there's one idea: track your risk to reward ratio. That's one thing you can start tracking right now. I've put out Excel sheets on the things that I track, and how I goal myself and how I keep myself in balance and things like that. But everyone's going to be a little bit different, so you'll have to adapt it to your own. Why would a trader seemingly distress of success not sustain efforts to monitor their own thoughts, emotions, and or trading performance. I believe it's because many traders are motivated by trading and making money, not by a desire to understand themselves in markets. This is an important distinction. To paraphrase Coach Bob Knight, they are motivated to win, but not motivated to do the work it takes to become a winner. Ding, ding, ding. And that's not in the book. That's just me dinging, because that's probably light bulbs going off in your guys' head. And if it's not, it should. In the best traders, self-mastery is a core motivation. It's why they continue trading long after they could have comfortably retired. The most common format of beginning a regimen of self-monitoring is keeping a journal. The basic components of self-monitoring journal might look as follows. Divide your journal page into 3 columns. The first column describes the trade that was placed, including the trade size and the time of the day. If you scale into a single position, you would treat that on a single entry in the journal. Similarly, if you enter several positions to capitalize on a single trade idea, example, you want to be long precious metals, so you buy 3 different mining stocks, those would also be incorporated with a single journal entry. The first column might thus summarize what you did for each trade idea, how much you risked on the idea, when you placed the trades, the prices that you paid, and how you placed the trades. Example, all at once or by scaling in, executed at the market or with limit orders. If you're a high-frequency trader, consider the possibility of automating your trade monitoring with tools such as stockticker.com or traderdna.com. The second column would summarize the outcomes of the trades, including the prices and times of your entries, your P&L for that trade or idea, and how you exited the trade, all at once, scaling out, market, limit orders. The third column would include all of your behavioral observations for that particular trade or trade idea. What were you thinking? How were you feeling? Your preparation for that trade, your degree of confidence in that trade, etc. In other words, the third column takes a look at you and your state of mind, thought patterns, and physical state during the trades. The third column could also include observations about how well you entered, managed, and exited the trades. Whatever stands out to you, good or bad, about the trade would be included in the third column. So there's another little mouthful there, but just gives you a little basic idea if you're having issues kind of oh, hang on. Let's see if this is an opportunity here.
Yep.
I wasn't even looking at the screen. I was just reading the book. Buyers stepping up to buy this 48 here. Yeah, it kind of looks like they've... Look at the tick trying to get back above 0 here. $50. Well, actually, this thing could bounce all the way to 60. I really think so. Buyers step up on the 50. Looks pretty good. Watch the 54. There may be some selling there. If you did get long that 48, you'd want to move your stop, basically break even at this point as you're fading the market, right? We're really fading against the market here with single prints above. So you don't want to really leave a stop at the D low just hoping that it's going to go, because if it does go back to that D low, it's probably going to keep going. So you want to just be in and out of this one, I think.
Yeah, I got long at 46.
Nice. I got long at 47, 48. Well, 47, 47 quarter, 47, 15, 48. I'm taking 2 up right here at 15, and 2 with a stop at 48.
I could see it coming back to 48 and ripping up to 60.
If it does, I'll be out. All right, let's get back into it. Got a little bounce there, a little scalp of a couple points, no biggie. All right, we're back at it, just going back down. Keep your trading journal doable. Many efforts at self-monitoring fail because they become onerous, whatever the fuck that means. Probably become a chore. In what book was that? What was that book I told you to read that you loved, Jared? Or your brother said it made him quit dipping?
Oh, Atomic Habits.
Atomic Habits. So in Atomic Habits, he talks about how if you want to start something, if you make the task more or less unachievable, it'll just be extremely hard to stay at it, right? So you want to make your journaling easy. If your journaling is difficult or becomes like tedious, or it turns into a chore, then you're less likely to keep up with it. For a trader such as myself, who only place at most a few trades per day, such a journal is relatively easy to keep. Prop traders who make dozens of trades per day or more, however, are likely to find such a journal to be onerous. One of the best ways to sabotage self-monitoring efforts is to make them so burdensome that you won't sustain the effort. If you're an active trader and cannot automate your monitoring of trades, you can streamline the journal in one of several ways. You can create a single entry for morning trading and the second entry for afternoon trading, with the column simply summarizing your positions, your P&L for the AM and PM, and your associated observations of trading at those times. You can create entries for selected positions only that stand out in your mind, either because they were quite successful or quite unsuccessful. If you sample from your trades in this manner, make sure that you include the best and worst trades so that you can observe positive and negative patterns. Those are the trades from which we can learn the most. If your trading is complex, with many positions, hedges, and a flowing in and out of risk exposure over time, like a market maker or a very active portfolio manager, you can simply summarize your day with a single journal entry. The first column would review your major trading ideas. The second column would note P&L. The third column would include your self-observations. There is no single self-monitoring format perfect for all traders. The key is to adapt the format to your needs and trading style. The real work comes when you've accumulated enough entries to notice patterns in your trading. The factors that distinguish your best trades and days and those that accompany your worst trading. How to analyze your self-monitoring journal will be the focus of the next lesson. For now, however, your task is to simply sustain self-awareness, to be an active observer of your own trading process. When you are your own trading coach, there is always a part of you that stands apart from your decision-making and execution. Observing yourself and exercising control over what you do and how you do it. The real value of trading journal is that it structures the process of self-awareness and helps you make it more regular and automatic. If you were walking on a familiar street, you would hardly think about how you walk. Everything would be on autopilot. If, however, you were taking the same walk in a minefield, you would be exquisitely self-aware, conscious of every step that you took. Trading is neither a walk in the park nor a minefield. Perhaps it's more like a walk in a beautiful but somewhat dangerous park. You want to be absorbed in the walk, but alert and aware at the same time. That is the function of the trading journal. It enables you to monitor yourself even as you are immersed in what you are doing. Boom. Well, guys, that's pretty much it. We've got our lesson. Any questions about the lesson? Oh, hang on.
Atomic Habits is such a good book.
I was looking to get short from the 73, but heard Brad entering long, so I decided to wait, then proceeded to get hammered taking longs at some mechanical levels on the way down. Don't get me wrong, I trader and place no blame. I'm just frustrated with myself that I didn't take. Yeah, that's
Oh,
that's
dude.
that's a,
I've been
yeah.
in that situation a million times.
Yeah, that's a tough situation there. And that's the thing is like, you know, it like that's why I'm so reluctant sometimes to kind of really like play by play the market, because it's one, it's just always changing, and two, my ideas are not always right. Where were you getting long at?
I was getting long at the VWAP deviations, especially the
Oh,
second and third one.
I have done that so many times where I get in, where I just fight the trend.
Yeah.
That's the hardest thing. That's the one thing that and it's funny, like there was a few times, well, multiple times where I'm on a call with Brad, or on the normal call. And I'm like, and often I was taking a short. And so I kept doubling down or averaging in, and I did it like, and it was not, I mean, it wasn't like crazy amounts of money, but it was in options. It wasn't in but Brad was basing it on the market. And Brad's like, yeah, I think this thing is going up. And I'm like, no, I'm looking at this thing. And here's the reality. It was all emotion. There was no real data I was looking at. And it was before I started trading the ES with Brad and doing the Apex account. But it's and even my numbers, even the numbers that I follow, that I created for my own indicators, were telling me it's going up. And I'm like, no, this thing, I'm looking, I just feel like this thing has to come back down. And there was one day I doubled down, I don't know how many times. By the time the day ended, I was in triple digit option contracts.
Wow.
Because I was just trying to, and here's the thing, because I just kept thinking, oh, okay, this is where it's going to stop. It's going to turn around and it's going to dip toward the end of the day. And Brad's like, I don't think it's going to dip. And I was like, this is before I started just taking him at word. And when he says something, I'm like, you know what? I mean, there's a chance he could be wrong, but the chances of that are more likely that I'm wrong. And I would rather have him be wrong a few times than me be wrong a lot. And so anyway, I just kept buying and buying and buying. And he's like, I think we're going to end on a peak. I really do. And I kid you not, the last 15 minutes of the day, it jumped another, well, at least for what I was trading, it jumped another almost 50 cents or $1 in AMD. And it was just like, why the F did I not just listen to him and dump it and get into a long? And if I had done that, because I was doing this the entire day, it's not like I did it just like at the beginning and then I was like, oh, I'll dump it and get into something else. I did it, I got into it and then just kept adding new contracts as the day went on. And if I had just literally at the beginning of the day, even when I was like 30% down in my original buy, so maybe an hour and a half into the day, if I had just dumped it and bought a long, I would have tripled the loss. I would have made 3 times what I lost if I had just followed what the trend was. And it wasn't just Brad. I mean, the trend was showing me, all of my data was showing me. It's just I was so emotionally invested in finding that top where it was going to turn around.
Yeah.
where
Well, it's got to bounce from here, right?
where were the
No, it's got-
deviations at?
Where were the what?
The deviations?
Are you?
Oh, you're not talking.
I took the first one at the first deviation, and that one, that I knew that was a higher risk one, but then I took my second trade at the second deviation, and that one got stopped out. And then all the rest of them I took.
What's that second deviation at 45? Because that's what it says on my screen. I'm just trying to see.
The
Right.
second when I took the trade, it was at 58 and it proceeded down.
That's
Yeah,
where
I'm
the
talking.
second deviation was at 58.
Yeah, that we're talking like 40 minutes ago.
Are you looking at the cash only VWAP?
Yeah,
Oh, okay. Yeah, because I'm looking at the 24-hour. That's why. Because I have my first deviation at 56, and then my second deviation's at 40.
yeah. This was at 9:09 that I took that one. But yeah, I just kept I just I wasn't paying attention to momentum, and momentum will take you a long ways sometimes. So
Yeah, because I actually got long 74 and then got stopped out 69 before during before the market actually went. And I started going short as we broke the low. 60.
yeah.
Found the 24-hour view to be more expected.
You found the 24 to be more okay.
That's the deviations that I watch. I have the cash VWAP on, but I don't look at the deviations. Really, I'm only looking for like that third deviation. Sometimes it's an oversold look.
Where are your devs at right now?
Or like 44.5 is the second. Like 55, 75 is the first.
Okay. Yeah, my second is at 46.50. And my
Yeah.
third is all the way down at 35 quarter.
Yeah, my
Yeah.
third deviation 33.
Well, I'll play with those charts and see if I can't better mimic yours.
Well, I don't use them for buying though, or selling. I don't use. I just have them on there so I can see where they're at. It's more or less
Yeah.
just kind of like a look who's winning type of deal. So like
Yeah.
if we're underneath of the first standard deviation, then sellers are kind of really in control, right? But if we can't hold underneath of the first standard deviation, then there's good odds that we rotate back to the view.
Yeah.
That's kind of how I look at it. The name of this book is called The Daily Trading Coach 101 Lessons for Becoming Your Own Trading Psychologist by Brett Steenbarger. I got it on Amazon. I just figured that'd be kind of a cool thing to add at the end of the day and just gives self-reflection. I'm gonna start. Well, but I read it like from front to back, so wrong format. Yeah, there's some good stuff in there. And there's some websites that accompany the book. Like there's like he has links to certain websites and stuff um that are made for traders. So definitely good stuff to have, I think. Quest 200. Ugh. Well, guys, I think I'm going to call it here. Market's not really doing much. It's kind of still sitting in balance. Remember, all the way down to this low, 39.13. You talked about that 39.22 level. Pretty impossible to be exact, but you've got the 100 SMA down here. You have the 20 SMA down there as well. So even if the market does break, I can't really expect it to break too much farther, especially with the breadth not really participating. You could even see the weighted AD. We did catch a little bit of volatility, and that was all because of tech. Like we saw, it went from basically being flat all the way down to negative 1.25, but we still didn't get on our weighted AD the low that we were at yesterday, weighted wise. So there's still a push-pull dynamic going on in the market, and that's why the breadth is positive, and we're so far below the settle, about 20 handles below the settle. Really the trend is down, obviously, but can't really be a seller here. You could sell against these single prints for sure if you miss. Tough to be a buyer here, but there's definitely opportunity, just because the lack of conviction from either side. Really, we can see the tempo as we're moving up. Tempo is getting pretty slow. You don't watch the NASDAQ, I would start watching it because it's starting to become a very important thing to monitor. Just because of, I mean, we just saw what happened. Tech went from being flat to being down 1%, and the market dropped 20 handles. So you never know. But other than that, make sure that you guys are managing risk and sticking to your trade plan. And I will catch you guys later.
Later, man.
Later, bro.
See you, bro.
Later, guys.